Farmer sentiment fell in April as concerns about rising input costs, tighter availability, and global uncertainty continued to weigh on the agricultural outlook. The Purdue University CME Group Ag Economy Barometer fell from 127 in March to 121 in April, reflecting declines in both current conditions and future expectations. Today, we'll break down what's driving the decline in producer sentiment and what it could mean for your operation. Before we get started, don't forget to like and subscribe for more updates. The April decline in the barometer was driven primarily by a drop in producers' views of current conditions, which fell 11 points. Meanwhile, expectations for the future declined modestly, but remained significantly lower than a year ago, down 28 points from April 2025. This shift in sentiment is closely tied to farm-level financial performance expectations. Only 15% of producers reported improved financial conditions compared to the same time last year. Looking ahead, producers are increasingly cautious. 28% of farmers expect their financial performance to worsen over the next 12 months, compared to 25% who expect improvement. This marks a noticeable shift towards pessimism and highlights the pressure many operations are facing in the current environment. That uncertainty is also showing up in investment behavior. The Farm Capital Investment Index declined 9 points to 44, its lowest level since October 2024, which of course is before the 2024 presidential election. This index reflects producers' willingness to make large investments such as machinery or buildings. A drop of this magnitude suggests that farmers are choosing to delay or scale back capital purchases, likely in response to tighter margins, increased risk, and certainly tighter cash flow. Input costs remain a central concern. In April, availability concerns increased slightly as well. Layered on top of this is growing global uncertainty, particularly related to the ongoing conflict in Iran, which began earlier this year. This conflict has implications for both fertilizer and energy markets, two key drivers of production cost, particularly for crop producers. Approximately two-thirds of producers expect the conflict to reduce their farm's net income in 2026. And when looking specifically at corn production, many farmers anticipate higher break-even prices next year. Among producers who planted corn in 2025, about one-half expect break-even prices to increase up to 6%, 14% expect increases between 6 and 9%, and 37%, an extremely large number, expect increases of 10% or more. These expectations reinforce the idea that cost pressures are not only persistent, but may intensify moving forward. Despite these challenges, many producers remain confident in their operational efficiency. 58% of respondents indicated that their operations have lower per unit fixed costs than their most efficient peers. This suggests that while margins are tightening, a majority of producers believe they are positioned competitively within the industry. Farmland value expectations also softened in April. The short-term financial value expectations index declined from 125 to 121, while the long-term index fell from 159 to 155. Producers pointed to interest rates, inflation, and alternative investments as key factors influencing land values. At the same time, optimism about the broader U.S. economy declined. 57% of producers said the country is headed in the right direction, down from 65% in March. Taken together, these signals suggest a more cautious outlook, not just at the farm level, but across the broader economic landscape. As we look ahead, the April survey highlights several key themes shaping the farm economy: continued pressure from high input costs, increased concern about input availability, growing uncertainty tied to global geopolitical events, and a more cautious approach to investment and expansion. While many producers remain confident in their ability to compete, the combination of rising costs and external risk factors is clearly influencing sentiment and decision-making. Monitoring these trends will be critical as producers finalize plans for the 2026 production year and look ahead to the 2027 production year. You can read more about the April Ag Economy Barometer on the Barometer's website, linked to the description below. Thanks for watching. If you found this useful, subscribe for more research-based insights, and we will see you next time.